In this video, we are looking at the Capricorn North pre-mid 23 accounting paper 2. We'll just be going over question 4, which is talking about fixed assets. So getting into the question, it says the following information appeared in the books of Zunga Traders for the financial year ended 28 February 2021. So when we're dealing with fixed assets, it's really important that we focus on the year end date, because that's where we have to calculate depreciation using a timeline and all sorts of stuff. Okay, so the first thing that's great to do here is draw a timeline. So our year ends on the 28th of Feb. Okay, so which means it began on the 1st of March 2020. Okay, so this is 2021. March, April, May, June, July, August, September, October, November, December, Jan. Okay, that's April, June, July, August, September, October, December, Jan. So make sure that you never miss a month in your timeline, otherwise everything is just gonna go south. Cool. Then the first one, we are required to calculate the following for the financial year ended 28 February 2021. The total depreciation on equipment for the financial year, and then the carrying amount or the carrying value of vehicles. And then lastly, we are just to say the owner plans to donate the Toyota 332 to the local old age home in the next financial year. Provide 2 reasons why you consider this to be a good suggestion. Okay, so let's take it step by step, beat by beat. Information A, extract from the records. We have 2 columns here. So the first one shows on the 1st of March, which is our opening balances. So I'll just say opening balances, and then these are our closing balances on the 28th of February 2021. So vehicles, the cost is 984 here. Okay, I see there's a stop, there's probably an adjustment. Okay, the adjustment says vehicles consist of 3 vehicles on 1 March 2020 as follows. So these are the 3 vehicles, and we'll get to them. And then our equipment cost, there we go, an accumulated depreciation on both PPE, which is vehicles and equipment. All right, so we are just going to start with the total depreciation on equipment for the financial year. Okay, so let's read on equipment and what they have to say. So equipment, the cost price, when we opened, we had the equipment cost at 234,000, but now what we have is 260,400. What does that mean? An increase in the cost price simply means that we have bought, but we do not know if we have sold. But what we're certainly sure of is that we have bought more equipment. So now let's read what the question has to say. So it says B, new equipment was purchased on the 1st of September 2020. No equipment was sold. Now we know that the increase is only of equipment that was bought. Okay, so how do we do this? Right, so to find the cost price of the new equipment, which is going to say 260,400 minus 234,400. Okay, and just to see what that gives us, just quickly tap into the calculator. So that is 26,400. So this is the cost of new equipment. So it's really important to write what amount I'm calculating. So this is much better just here on top to show what the calculation is for. Okay, okay. That's the cost of new equipment, right? Now we move on to calculating the depreciation. When was it bought? So it was bought on the 1st of September 2020. Okay, I think it will be much better if we draw our timeline, or if we just move it closer to our adjustments, so we can just refer it as we work. Right. Okay, there it is. Now it was bought on the 1st of September, which is here. So as it was bought on the 1st of September, we are going to also count September, because it was bought on the 1st. Okay, so it's 1, 2, 3, 4, 5, 6. So that's six months. 6 months into use. Okay, so now you know how to calculate the depreciation. You have your cost, you have your duration of use, and then information C says vehicles are depreciated at 20% per annum on cost, and equipment is depreciated at 15% per annum on the diminishing balance. The reason I opted to start with the equipment that was new, it's because it doesn't have accumulated depreciation, so we don't really need to use any complicated amounts. So it will be just 26,400 multiplied by 6/12 multiplied by 15%. 15%. So this is the new equipment. New equipment. All right. Now we are just going to check on our old equipment. Our old equipment was worth 234, but our accumulated depreciation was 105,600. So remember that when we're using our diminishing balance, it's supposed to be cost price minus accumulated depreciation, which will give you a carrying value. And then here our cost price in this case is 234 minus accumulated depreciation of 105,600, which gives us the carrying value of let's see, 128. I almost have 12,000. Okay, so it's 128,400. There we go. Now 128,400 multiplied by 15%. Remember, we don't need to multiply by the number of months because this was used for the whole year. So it's 128,400 times 15%, and diminishing balance, which is 19,260. Here, 1 minus and plus. Okay, it's a plus. So this is equal to, what did we get here? I actually didn't calculate, now that I see. Okay, 6/12 times 15%, it's 1,980. So total depreciation, it's just the addition of these two amounts. So it's 19,260 plus 1980, which is 21,240. Let's just see if we didn't leave out any information. No. Okay, so we move on to calculating the carrying value of vehicles. Okay, that's quite a lot because I'm seeing 9 marks there, but not really. We're just gonna ace it as we go. So no vehicles that we knew during the year we bought, none. And then vehicles are depreciated at 20% per annum on cost. So whenever you are dealing with cost, I'm just gonna make you alert that some values may be less than your depreciation, your cost actually, which means your vehicle is fully depreciated. Okay, so I'm just going to show you how this one goes, because I've made some past papers that show depreciation that is much greater than the carrying value, and that's where your if vehicle, or should I say PPE, is just fully depreciated. and it's worth at least 0, or you could say 1. All right. So now with vehicles, the carrying value, we are just going to approach it as we see of each vehicle step by step. So remember that it's 20% per annum on cost. Okay. So the first vehicle is a Toyota 332 with a cost of 84,000 and accumulated depreciation is 78,400. So it's 20% on cost. Okay. So the first vehicle, it's 84,000 multiplied by 20%, which will give of 84 times 20%, which is 16,800. Now, as I said, we are testing if it is fully depreciated or not. So now accumulated depreciation is 78,400. Okay, we have 78,400, and now the depreciation is 16,800. What does that give us? 16,800 plus 78,400 will give us 95,200. But its cost, so this is the accumulated depreciation at the end of the year, but its cost was 84,000. So now the accumulated depreciation is greater than the cost of the car. Wow, how does that even happen? That means the car is fully depreciated. Now its worth is actually, we could say 0, or its carrying value is 1. So now how do we get the carrying amount? So, or actually the depreciation. So the depreciation, just for future purposes, in case you ask for the depreciation, but here we ask for the carrying amount. So depreciation is equal to the carrying amount. No, it's actually okay. I should say carrying value. That's carrying value, which is equal to 1. Now your depreciation, as I was saying, is just going to be your carrying value minus 1. So your carrying value, what am I saying? Your depreciation, excuse me there, I was just a bit confused by the wording. So your depreciation is equal to your carrying value minus 1. Yes. Okay. So what was our carrying value? Our carrying value was 84,000 minus 78,400. Now, to decrease the carrying value to being 1, what do we need to do? So our carrying value when we opened our books at the start of the year was 84,000 minus 78,400, which is 5,600. This was our carrying value. So now to get the carrying value to be 1, because it's fully depreciated, we're just supposed to say 5,600 minus 1, and then our depreciation is supposed to be 5,599. All right. So now our carrying value, we'll just say it's 1 plus, so just gonna say fully depreciated. So the carrying value for the first car is just 1 rand because it's fully depreciated. Now the Mazda 3X, its cost is 430,000, and then its accumulated depreciation is 258. I doubt we're gonna have a problem there. So it's just 430. So let's just remove 430 minus, oh, we actually don't need too much, so to subtract anything, just multiply by 20%, then see what the depreciation is. So it's 430 times 20%, which is 86,000. This is the depreciation for the current year. This is the second car, remember. Now what was our accumulated depreciation? Was 258. So 258 plus 86,000, that will give 344,000. So our carrying amount will be 430 minus 344,000. Okay, plus, where are we going with this? The last one, Ford Ranger, the cost is 470, accumulated depreciation is 94,000. Let's just quickly calculate. So it's, what's the cost again? 470. 470 minus 94,000, is it? Oh, why do I keep on subtracting? Because we aren't really using the diminishing balance here. I'm really used to the diminishing balance. Please forgive me there. So it's 470 times 20,000. So be careful that you're not doing any of the mistakes that you are noticing here, because it really happens. It happens to everyone. No human is perfect, of course. So that's 94,000, and we are just gonna say 470,000 minus, remember that your accumulated depreciation before was 94,000, so it's 94,000 this year also. So minus, let's say 94,000 times 2, 94 times 2, which is 188.23. Okay, in case you're confused what's going on, these are just carrying values. This is cost price, this is accumulated depreciation. Remember that your cost price minus accumulated depreciation will give you what? Your carrying value. So in case you're confused, this is just a representation of this formula. That is why it's just going to give you the carrying value. This is the second car, this is the first car, this is the third car. This is the cost price, this is the accumulated depreciation. Let's just simply get our answer at the end. So it's 1 plus 430 plus 344 plus 470 minus 188, and then our carrying value is 368 and 1. All right, okay, so we are towards the end of the question, which says provide 2 reasons why you consider this to be a good suggestion. So what's the suggestion here? The owner plans to donate the Toyota 332 to the local old age home in the next financial year. Then we're supposed to provide 2 reasons why you consider this to be a good suggestion. Okay, this is pretty simple and straightforward. So why would we be donating? First of all, it's an old age home. We're just making a social impact. For sure, you might have heard of the corporate social responsibility, so CSR, or let's just say social impact. So this is just as to demonstrate commitment to social responsibility and the community's welfare. I would say something like giving back to the society. So this is where your thinking is not supposed to be limited. It's just supposed to think outside the box, right? Anything that is really sensible and would convince the market to give you the full 4 marks. So giving back to society. Okay, of course, I think you need 2 answers here. Yes, they said provide 2 reasons. And then what I would say next is just positive brand building, or what others would call positive image building, because we're just building the image of the business as the community would see that the business is really, is really keen on supporting the community. And we also seeing that consumers often prefer to support companies that show careness and about the community and are willing to contribute to important causes. So when businesses are actually engaging in charitable activities, that's when the community starts to support the business in terms of buying from the business and so on and so forth. So now that's just about it for the 20 marks. And I think it's how long was the question supposed to be? 15 minutes. Okay, so as you prepare for your prelims, I just wish you guys all the best, I know you will definitely ace accounting. Just keep on watching the videos. Don't forget to like, subscribe, drop a comment on any content related with accounting that you might need help with. I'm here to help you accounting. I'm here to help you ace accounting, yes. And I'll definitely see you in the next video. Cheers.